welcome to your one-on-one consultation. I'm your host and tax expert, and we're going to jump right into exactly how VAT works for your new business here in the UAE. You know, if you've recently set up shop or you're just getting your operations off the ground, simply hearing the word tax might make your heart skip a beat. But honestly, don't worry. Relying strictly on the official guidelines from the Federal Tax Authority, we're going to break this whole thing down so you have absolute clarity on your responsibilities.
So let's dive right in and clear up any of those headaches or fears you might be holding on to about tax compliance. Because understanding the mechanics of that is actually much, much simpler than you might think. A lot of that anxiety, it just comes from not knowing how the system functions behind the scenes. Today, we're demystifying all of it. We're going to look at how VAT moves, and most importantly, exactly where you stand in the process.
Here's our agenda for today's explainer. First, understanding your UAE VAT. Then, VAT around the globe. Third, the supply chain analogy. Fourth, your role versus the consumer. And finally, preparing for VAT registration. Let's get to it.
Section 1. Understanding your UAE VAT. Right now, the UAE levies a standard VAT rate of 5%. This 5% applies to most goods and services across the country. Now, sure, there are a few specific exceptions depending on the exact nature of your business, but as a general rule of thumb, whether you're running a boutique cafe in Dubai or an IT consultancy in Abu Dhabi, 5% is the standard rate you're going to be dealing with day in and day out. And here is a really crucial concept: indirect consumption tax. What does that mean? It simply means this is a transaction-based tax, not a direct tax on your own business profits. Basically, every time a good or service changes hands, this indirect tax gets applied. It's fundamentally tied to consumption, meaning it's designed to ultimately target the person who consumes the final product, not the businesses making it or moving it. Keeping that word indirect in the back of your mind is going to be incredibly helpful for us going forward. Section 2. VAT around the globe.
You know, while VAT feels exactly like a general sales tax to your end consumer, it's actually a far more sophisticated system. It's an incredibly robust global standard, currently used in over 180 countries. To put that into perspective, literally all OECD nations, except for the United States, utilize VAT or some variation of it. Why is it so incredibly popular? Well, it effectively overcomes a lot of the logistical challenges and inefficiencies that plague standard general sales taxes. The US still relies on that older general sales tax model, but the UAE adopted this highly sophisticated, globally recognized VAT framework, meaning as a business owner here, you're operating within a very modern, streamlined system.
Section 3. The supply chain analogy. According to the Federal Tax Authority, VAT is levied at each step of the supply chain. It moves from your supplier down to your business, where you act simply as a temporary cashier, and finally down to the end consumer who actually buys the product. Just picture a cashier in a retail store. When they ring up a customer, they take the cash, right? But that cash doesn't actually belong to the cashier. It goes straight into the register for the store owner. Your business is operating in the exact same way for the government. You just sit in the middle of this chain, facilitating the transaction. Exactly like that cashier ringing up a sale and putting money in the store's register, the Federal Tax Authority explicitly states that your business is simply acting as a tax collector on their behalf. You're just gathering that 5% to pass along to them. You are collecting and accounting for the tax. That money, it's never truly yours. It belongs to the authority. And honestly, once you internalize this concept, the anxiety of VAT compliance really starts to just melt away. You're literally just holding those funds in trust. Section 4. Your role versus the consumer. Let's compare these two roles directly, because this is absolutely crucial. Your job as a registered business is strictly to collect and account for the VAT to pay to the authority. You do the administrative heavy lifting. But, and this is arguably the most important takeaway from our consultation today, it is the end consumer who actually bears the final VAT cost. For your customers, VAT impacts the price they pay on goods and services. They are the ones paying the ultimate 5% premium. You are completely isolated from that financial burden. Your burden is purely administrative. You collect it from them, and you pay it to the authority. Simple as that. Section 5. Preparing for VAT registration. So, to wrap up our consultation, I want to leave you with a critical thought to prepare for our next session. Based on your specific operations, does your business actually need to be registered for VAT right now? The UAE has very specific revenue thresholds and criteria that determine exactly when a business must officially register to become one of these cashiers for the Federal Tax Authority. Understanding the mechanics of the tax, well, that was step one. Step two is determining your legal obligation to actually enroll in the system. So take a hard look at your current revenue streams and business activities. Hold on to that thought because that is exactly what we'll be tackling in our next explainer. See you then!